We were very pleased to get our 73rd game changer into the fleet for peak summer 2022. These aircraft have 4% more seats, yet burn 16% less fuel and CO2, and are 40% quieter than the existing aircraft. We're also very pleased that we've partnered with Neste now in Amsterdam to pick up a 40% SAF blend, sustainable aviation fuel blend, on our flights out of Amsterdam. And I think it's important that we've received strong backing for the work that we've been doing in the form of Sustainalytics, who have now ranked us as the number one airline for ESG in Europe, and indeed the number two globally. And this morning we're very pleased to launch our Aviation with Purpose sustainability document, which sets out our ambitious targets for the next decade and also sets out our path to carbon zero by 2050.
What is Ryanair's job creation plan for the next 5 years?
We plan to create 6,000 new well-paid jobs for aviation professionals, focus being on bringing through cadets and engineering apprentices. We're investing 100 million in 2 new iSkills training centres. We've ordered 8 CAE simulators, and we're opening 3 new maintenance bases in Kaunas, Shannon and in Malta, all of which will help our operational efficiency and effectiveness.
How are the pay restoration discussions progressing?
Very well. We took the decision, as you know, at the start of COVID to minimise job losses through agreeing pay reductions with our people and their unions. However, when we saw traffic starting to come back in the spring, we moved quickly to enter into pay restoration and acceleration discussions with our unions and our people. We're committed to restoring pay back to pre-COVID levels as soon as the operation gets back to pre-COVID profitability. And I'm pleased to say that over 80% of our pilots and 70% of our cabin crew have now signed up to agreements on accelerated pay, and we would hope to finalise the small balance that remains in the near future.
And what are investors to make of strikes in Belgium, Spain and Italy?
I think these have had much more PR noise or notice than any effect they've had. We've had some strikes called by minority unions in Spain and Italy in recent weeks. They've not been supported by our cabin crew or pilots. The Belgian strike, we've had some Belgian cabin crew and pilot strikes. But remember, throughout the summer, Ryanair is operating more than 3,000 flights per day. On no days of these small strikes have more than 1% of our flights been affected. In actual fact, it's ATC strikes and cancellations have caused us far more disruption than these very small and poorly supported strikes in Spain, Belgium or Italy.
Michael, we read a lot about airlines cancelling flights these days. Why is Ryanair's operational performance so much better than its peers?
The decision to minimise job losses and keep crew current during COVID has been vindicated. We're fully crewed for summer 22, despite operating at 115% of our pre-COVID capacity. We're suffering more disruptions from ATC and airport staff shortages than anything else, and we're confident that we'll complete up to almost 100% of our summer schedules, which will be about 115% during peak summer of our pre-COVID capacity.
And do you expect an increase in disruption costs due to these delays?
No, the majority of disruptions are outside of our control. It's the likes of air traffic control disruptions and airport handling and security delays. We are finishing our flights, we're not cancelling flights. While we do have some delays that may be subject to EU 261, any costs will be immaterial in the grand scale of our numbers.
And you referenced that Ryanair is operating 115% of its pre-COVID capacity this summer. Where are you seeing the market share gains?
We have very strong market share gains in Italy, Austria, Hungary, Poland, Portugal and Ireland. We've opened 15 new bases. We're operating over 770 new routes. And I think the important thing is that Boeing are scheduled to deliver us 50 more game changer aircraft in advance of summer 2023, so we can maintain this capacity growth into a market across Europe where most of our competitors have either gone bust or significantly reduced their capacity. So we're winning and we expect to continue to gain significant market shares.
Will you move any capacity around this winter or indeed into summer 23?
Well, we're in the happy position that we've got more airport offers and we actually have aircraft available to us. we'll be opportunistic in how we allocate that. And if there are airports increasing fees, as we're seeing, as we saw, for example, in Fraport in Germany, and indeed as we're seeing with Fraport down in Greece and with some of the high-cost Belgian airports, then yes, we may move some capacity this winter. But it's not all about moving capacity, it's about also adding additional growth. And we've announced a new base, for example, in Belfast for the summer of next year. We're adding extra aircraft into Venice, and we believe there are significant growth opportunities for us over the next number of years. We already have 50%, for example, of summer of 2023 on sale at this point in time. So we'll continue to put the capacity where we see the best opportunities.
And will an economic downturn or recession impact Ryanair this autumn or winter?
Yeah, we think it'll be good for Ryanair's growth because in a recession, people still fly. They just become more price sensitive. Ryanair has the lowest fares, a growing market share. We're very well hedged for fuel and currency, and that gives us a key competitive advantage into this winter. And into summer 2023, we take delivery of 50 new game-changer aircraft, which lower our costs because they allow us to carry 4% more passengers, but at 16% less fuel.
How will Ryanair achieve its 225 million pax per annum target by FY26?
Well, we have a 210 aircraft order book from Boeing, 73 of which have already been delivered. A lot of capacity has come out of the market over the last 2 years, and airports are very keen not only to get restoration but also to try and get some growth deals locked in with Ryanair, who's the only airline that's really growing at any pace over the next few years. So, I think we're in a very strong position. We've already locked in a number of our larger bases like Stansted, like East Midlands, like Bergamo, Charleroi, etc., with deals out to the end of this decade. So we've got lots of opportunities to grow, and we will grow to the 225 million passengers by FY26.
So just moving on to your fleet, Michael, any further update and discussions with Boeing on a MAX 10?
Not much. The negotiation of Boeing ended in 2021. Boeing are nowhere close to being competitive on pricing, and that's why other Boeing customers are switching to Airbus, such as Transavia, Qantas and the recent Chinese order. But we're very pleased that we're in the comfortable position that we have 210 game changers with deliveries out to 2026. That's sufficient growth to take us to 225 million passengers. We look forward to resuming discussions with Boeing, but only when Boeing get to a place that's where they become where pricing is competitive and will not lead to an increase in Ryanair costs.
Are you going to take more leased NGs into your fleet?
We looked at this over the past couple of months and have decided not to do so because there's a much better opportunity to extend the majority of the Lauda A320 leases for periods of up to 4 years.
What's the rationale, Neil, for extending these leases?
Well, first and foremost, we're going to be able to lock in significant cost savings, not only for the 4-year extensions, but also for the average 2 years up to that. So 6 years of savings coming through on these aircraft leases. It also gives us greater operational efficiency and opens up more growth opportunities.
Do you have any concerns about Boeing's ability to deliver aircraft ahead of summer 23?
Yes, we do. Boeing are hinting at having delays of the 21 aircraft we're due to get between September and December this year. This is inexplicable given that Boeing have confirmed they're producing 31 aircraft a month from June, which is 200 aircraft before the year end. And if there's any delay in delivering 21 of those 200 aircraft to Boeing, we think that would be inexplicable and unacceptable. But we will continue to work with Boeing, and we expect them to meet and in fact beat the delivery dates for the 50 game-changer aircraft we expect to take between September of this year and April of next year. They're producing more than sufficient aircraft to deliver Ryanair those 50 aircraft.
And Neil, looking at your results, you reported a Q1 profit pre-exceptionals of €170 million. What are the highlights?
Well, traffic rebounded strongly in the quarter from just over 8 million last year to 45.5 million at a strong load factor of 92%. Unfortunately, Easter was badly impacted by Russia's invasion of Ukraine, which impacted close-in bookings, but also fares to the extent that average fares were down 4% compared to the same quarter pre-COVID. We did, however, have a strong performance on ancillaries where we generated about €22.50 per passenger, and cost control within the business was strong at a time when sectors increased by 330% and traffic was up 460%. Also, fuel had almost a six-fold increase to $1 billion billion. We only saw costs increase by 250% in the quarter. And this was down to the lower variable costs that we have, the addition of the 73 game changers that came in at the right price, but also 16% lower fuel burn. That was offset somewhat by the higher cost of fuel, and indeed the higher cost that we're now paying for route charges, despite the fact that the service is not up to scratch. So as a result of all of that, our unit costs in the quarter reduced to €30, which was a good performance.
Neil referenced strong ancillary rev performance, Michael. What are the key drivers?
As they have been in recent years, it's very strong performance on priority boarding, reserve seating, and in-flight sales are going particularly well this summer, especially the commencement or the growth of duty-free sales on our flights to and from the UK, which now accounts for almost 40% of our 3,000 daily flights.
Fuel prices obviously spiked recently. What's your current fuel hedging position?
We're the best hedge airline in Europe at the moment, with 80% of our fuel for this year hedged through a combination of jet swaps, about 65% at over $60 a barrel, and another 15% through caps at just over $70 a barrel. And then importantly, we've extended our hedging book out into FY24, so we're now over 30% hedged into FY24 at just over $90 a barrel. And I think it's important to also highlight that in an environment where the euro dollar is almost trading at parity, we've got our OPEX well hedged at over 115 this year, and indeed our CAPEX on the Boeing game changer order also hedged at about 124.
Let's turn to your balance sheet. Is net debt reducing?
Yeah, net debt has fallen by over $1 billion in the quarter, from 1.45 billion at the end of March to 0.40 billion at the end of June. We've seen very strong cash inflows, which has increased our cash balances, as Neil said, to just over 4.5 billion at the quarter end. We continue to have 90% of our 737 fleet completely unencumbered. And it remains our target to reduce net debt to zero over the next 2 years, despite peak CAPEX and the need to repay two over 1.5 billion in bond repayments over that period.
Any update, Neil, on the CAPEX guidance?
It was unchanged from the previous guidance I gave back in May. So we're looking at a peak CAPEX this year, FY23, of about 2.3 billion. That includes aircraft, pre-delivery payments and maintenance. And then next year, we'll see that drop to about 2.1, 2.2 billion before it drops significantly into FY25.
How will you finance the game changer aircraft order?
As always, we'll continue to be opportunistic. Most of the funding will come from strong cash flows thanks to the post-COVID recovery. We continue to retain a solid BBB investment grade rating, and we have 90% of the existing fleet is unencumbered. As always, we will select the lowest cost financing option from a suite of measures, including unsecured bonds, bank debt, sale and leasebacks, JOLCOs, and internally generated cash flow.
Are there plans to distribute funds to shareholders in the near term?
As Michael said, our objective over the next 2 years is to manage our peak CAPEX and indeed to pay down maturing bonds over the next 18 to 24 months as well. And that's where we'll be focused.
Michael, finally, let's close the Q&A by discussing the group's outlook for FY23.
Sure, it's too early to give any accurate guidance because there's too much uncertainty out there, but there are clear signs of pent-up demand in summer 2022. The booking curve remains closer in than was normal prior to COVID. The traffic recovery, however, has been strong. We are on track for a 95% load factor during July, but we still believe that recovery is fragile. If there are adverse news flows on COVID or Ukraine through the autumn or into this winter, then that recovery will be damaged or impacted as it was last Christmas and last Easter. We have no visibility at this stage into H2. H2 is normally loss-making, but at this time the good news is that the second quarter average fares are tracking up now a low double digit. That was high single digit at the time of the full year results, ahead of peak summer 19 fares. We are expect that we're on track to grow to 165 million passengers. That would be up 11% on pre-COVID, as long as there is no adverse news flows between now and the end of the fiscal year. But due to the later booking profile, that lack of visibility in the second half of the year, the volatility of oil prices, particularly for the 20% of our fuel that's unhedged, the possibility of negative COVID and Ukraine news flows means that recovery is potentially fragile this winter. And that means with the regret it's too early to provide any meaningful profit after tax guidance for the full year, but we do hope to be able to give the market a much more or some realistic guidance by the time we get to the H1 results at in early November. Nevertheless, as Neil has said in his presentation, I think what's key here is not the short-term news flow, but the very strong growth opportunity that Ryanair is sitting on. We have a unique combination of low-cost aircraft deliveries coming to us. We're very strongly hedged both on fuel and on currencies, and we are deploying these aircraft in markets like Italy, in Ireland, in Vienna, and in Hungary, where we are taking very significant market share from the competition, and we believe that underpins our strong growth recovery to 225 million passengers by FY26 and a full restoration of the profitability and the margins we enjoyed pre-COVID. It's just we're not sure yet whether that will be in FY23 or in FY24. And with that, can I say thank you to everybody for participating in this morning's release, to Neil and to Peter Larkin, our head of Investor Relations. Thank you. We look forward to talking to you later on the investor call and also on the analyst call.